Ladies and gentlemen, I know we are taking your time and thank you very much for attending with us until this last session. And our final panel will be with, let's say, exciting and shifting and the investment side. And with me will be today, uh, let's say, a new generation of founders, new generation of investors, a new high-income professionals who are defining how wealth is created, managed, and invested in the region. Joining me today is Hamad Sheikh Musaed. He is the director of business development at KFIC Investment. Hamad has over a decade of experience in wealth management and institutional advisory, and today he's driving strategic growth and digital transformation at KFIC. He will be joined by Deena AlRefai, Executive Vice President of Wealth Management and Business Development at Markaz. Deena has been in Markaz for 2 decades and building deep relationships with institutions and high net worth clients and shaping the firm's investor engagement strategy. And bringing a unique retail perspective on original scale is Ahmad Khatib, Chief Business Development Officer at CFI Financial Group. Ahmed has more than 25 years of leadership in financial services, helping transform businesses and drive growth across markets, with the focus today on aligning CFI's strategies with the evolving needs of Gulf. Please welcome me, our speakers and the panelists. Yes. 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 Good afternoon, everyone, and thank you for joining us today for our last panel, talking about catering the next generation of founders and investors. To start, I want to ask a general question for everybody. What are you noticing and hoping to expecting for our new accounts, say over the last 5 years? Are they more risk averse or less? Are they more local oriented or global oriented? Are they demographic changes? Any demographic changes? Please, I want your perspective, starting with you, Deena.
Yes. First of all, thank you for having us. We appreciate the invitation, and this is a very well-renowned summit that we look forward to every year. What we've noticed at Markaz, the new wave of investors coming in, want to preserve the local, or let's say the anchor wealth-creating core that they have, and want to complement it with strategies that give yield preservation and growth and compound wealth over the next generation. So they're open more to diversification. In the Gulf, especially in Kuwait, as you know, we have a country bias,
Yes.
and the new generation are very globally connected. They're tech savvy.
Yeah.
They want the information ready, live, dashboards, data. So this is what we've been noticing.
Yes. Hamad.
Assalamu alaikum. Jazakum Allah bil khair. Thanks. First of all, thank you for giving me a chance to sit with my esteemed colleagues. If you don't mind, I'd like to capture the last 5 years,
Yes.
in a very brief way. So we started with COVID-19 at 2020. The rates were zero at that time. Money was cheap, a lot of money, liquidity in the market. 2021, a new scary word came out, which is inflation. Oh, everybody was afraid of inflation. And at that time, supply chain inflation. If you remember Evergreen, the tank, what happened in the Suez Canal. NFTs. So right now, I don't know, like 4 years ago, NFTs were the fad. I'm not sure how many of us own NFT or bought a house in a metaverse, but those were also assets at that time. 2023 came out, and we saw wars between Russia and Ukraine, and which ended COVID. And with all of those happening at the same time, all the companies were pushing to adapt to digital transformation, because everybody, it was either adapt or die. That was the name of the game at that time. So these changes gave all the investors a very basic need of accessibility. And that is in the sense of having access on different asset classes. Talking about cryptos, whatever it is, different channels, different geographical spread also on your portfolio. So the huge change is the minimum barrier of entrance for anybody who wants to invest right now is extremely higher than it was 5 years ago. Extremely higher. If you don't have an online access to review the dashboard and all of that, like you're not even at the bare minimum. So it is changing. It's ever changing, and you have to adapt and find your way through
Yes.
that.
Ahmed, from a perspective, cross-border view.
Thank you. And I think the main difference that we're noticing over the last few years is that the average age of a typical investor is decreasing a lot. And I think this is a result of the tools that are used in investment. Access has become easier for everybody, but to use the tools that are related to investment products, to alternative investments, to new products, understanding them, having the ability to interact with the platforms that deal with them, I think those are leading into a reduction in the average age of the typical investor. And this, in turn, creates different opportunities. So a lot of them maybe would be overlooked by a traditional investor. Now, traditional investor is not like really proper word here, because someone who was very active in investment like 20 years ago, that is not very traditional, is a little bit far from what we're seeing from the new investors now. So I think this is the main difference that we're noticing, and I think it's impacting the development of new products going forward.
Yes. And Deena, talking in the same, let's say, area, we are seeing projections that the average Kuwaiti investors will be soon allocating 35% of their portfolio to alternatives. Is this what you are seeing? And are they reducing their exposure to public equities or real estate on this matter?
Okay, maybe it's aspiration more than projection. We are seeing diversification towards alternatives, but they are using it as more of strategies to complement steady yield. Traditionally, real estate is a big part of the core investments for the families and investors here in Kuwait and in the Gulf region as a whole, with a lot of concentration also on listed equities for the liquidity. But we're seeing more and more, especially the newer generation and even the well-established founders of those families, looking at private credit strategies, infrastructure, real asset strategies to diversify away from the volatility of the liquid market and to create access to growing sectors that are more readily available privately than the public one.
Yes. And the same also, we don't want to jump to another topic. It's also for you, Hamad. The GCC is projected to look at 1 trillion wealth transfer by 2030. By what you are doing in KFIC to capitalize this transfer from a product point of view, let's say, and from your own reach point of view to these new investors and new money that is coming to the market. Also using, like Ahmed said, new tools, new technology. What you are seeing, what you are going to, how you are going to capture that?
So continuing on my colleagues also, so the new investor who's inheriting that money is the one who's is using the new tech. Just like the old generation inherited the old money, this is the new ones. So we had the same sense of adapting and finding new ways, new tools to provide to clients. We have that back of our mind. We'd like to position ourselves to have the most access product for that fits the client's needs, and that's the most important thing, because I believe you can make money in different asset classes, because everybody's making money in different asset classes. You just have to feel comfortable about it. Everybody views risk in their own way. Some people sees the highest risk, like tradable equities, as a low risk versus real estate. So it's just like when they say beauty is in the eye of the beholder, risk is also in the eye of the beholder. So from that sense of view, we'd like to offer whatever that fits within the economic cycle right now, because you can make money within the economic cycle. You just have to position yourself in the correct way, and that is by having access to different products, having tech-enabled products, in the sense of viewing, or actually having the mandate, or having the power to invest, liquidate, partner up, which is right now is very different, because now you can invest with 100 KD, like a retail. Like 10 years ago, it was 50,000. It's just, and that opens a whole new, different kind of segment, which we'd like to cater to based on the rules and regulations of the CMA. So being part of the tech-enabled companies, and also positioning ourselves within the economic cycle and anticipating, because sometimes things just, it doesn't make any sense, but you have to anticipate, and you have to be faithful within your mandate.
Yes, 100% agree on that. Ahmed, on the same topic, how are you staying relevant to cater the new generations of investors? Completing or complementing what Deena and Hamad said.
Okay, I think for us, staying relevant is mainly related to improved access and education. Those are two things that we continuously invest in. But also, I want to comment on the part related to the transfer of wealth between generations.
Yes.
I think what we're noticing now is not only how the new generation that is within the same family, for example, inheriting wealth, using new tools, advanced, this is given. But I think there is also a shift in how the new generation perceives or looks at wealth. The objective historically by the founders of the family wealth was wealth creation, preservance, growth. Now it's more of looking, more than like owning the wealth, it's what this wealth is creating access to them in different places, different industries. And a lot of times we're noticing like the wealth is, or the type of investment they make is the type of identity they want to build as investors. Some of them, they go to angel investment. Some they go to different types of investments. More than the wealth creation itself, it's an objective in itself to create the identity for them as investors in a sector or a type of investment. I think this is gonna filter out over the years, but I think this is a major shift in how those who control the big capital behave and allocate their investments going forward.
100%. Touching on that point, preserving the family legacy. Okay, I know that we have discussed that in our introductory call. Education, investment education. So we have, let's say, the same idea that we need an investment education, but from perspective of Markaz, KFIC, and CFI. Deena, what's your thoughts on this matter?
I believe that education is crucial, because the founders or the first generation make the money, and without the proper knowledge and awareness, the second generation tends to waste it. From Markaz's perspective, we have a fiduciary responsibility to our clients to educate them financially. I mean, financial aspect of how to manage their wealth with a discipline of an endowment, proper governance, risk management, a proper investment proportion, and as well as offering the second generation opportunities to internship, be available at the finance community, asking the families to include the second generation in the conversation, have a place at the table, be a part, even a small part of the investment committees that happen. And the recent research that came out in regards to family offices and families, the merchant families in the GCC, about 49% don't have a succession plan.
Yeah.
So there is a huge potential to institutionalize this process and have something called like a family constitution, put a proper plan in place, and make the conversation a little bit lighter. It's not about inheritance. You know, this is a doomed scenario. It's about the conversation should shift to a conversation of legacy, a shift of perspective.
Yes. Hamad.
And of course, education is. I'm a product of education. You know, so of course, in KFIC, we would like to emphasize on how important it is for different types of education. So for the masses, we'd like to. We always put ourselves out there for anybody that if they need a training, they can come by. We can go to them. We'll do that within our, I would say, annual mandate. Also, at the same time. There is education for the entrepreneurs, which is also very crucial. That is kind of transfer of wealth. What we saw in the past couple of years that many people that actually knows how to run their business, they lack the third or fourth year of a strategy planning, which we think we can come in and advise those entrepreneurs. And when you're doing something, Abdullah, and you're very good and you're making money, sometimes you tend to not listen to people when they trying to tell you some stuff. And then afterwards, you was like, why did I just kept on investing my money in the business for the last 5 years? And now I want somebody else. And they put themselves into position, that's the character of an entrepreneur. We come as the counterparty of trying to educate, advise, and that and so forth. Also, education within the youth and high schools. As I told you, I'm product of education. Before there used to be more and more programs that actually cater to high schools and teach them financial literacy, not just investing, just how to handle your money. Yes, education is crucial. I think there are different types of educations, and we would like to be part of all of those. Yeah.
Yes. And staying with the same question, Ahmed, will be there a conflict between preserving the legacy and investing in the future in this matter, from your point of view? Conflict between the preserving the legacy and investing in the future. Let's say if we are continuing with the educational, let's say, topic, are you seeing a conflict?
No, there is no conflict, but there is sometimes it's the adaptation might take time or be a little bit challenging, but there is no conflict, of course, because that's how it should be. Like there should be a transfer of wealth, there should be a transfer of knowledge, education, legacy, and so on, preserving that. It's just that it's happening in a different way now because the tools, as we said, the platforms are different, the access to different markets. Therefore, the education is we call it education, but I think it's education plus experience together are important to continue to grow with those who will make the decisions to be able to achieve those objectives.
Yeah. Last question before closing our session. If there's a 30 years old entrepreneur or investor in the audience today, what piece of advice will be giving to him from your side, Deena?
Start financial planning, start a plan. I mean, I know entrepreneurs are all about investing back into their business, which they should, but start looking for a partner, a trusted partner, an advisor for financial planning for the future.
Hamad.
So it's an entrepreneur 30 years.
Yeah.
I would say just go for it.
Yeah.
Do your thing. Just be open to somebody within the field that you can take advice from. And usually having a board would give you that experience. So just be open to it. Try to. You don't have to reinvent the wheel. Just whatever people done before they done it, they became from seed to a huge companies. Just try to do that, and they always come with different stage of advice. So just acknowledge where you are right now and try to climb the ladder with somebody who has experience locally and internationally.
Amazing. Ahmed.
And I would advise to look at wealth as a system, like the one has to build, where you start building the wealth, you want to preserve it, you want to grow it, you want to diversify it, and not just like only the return on investment you make. Because if you're seeing a person who's 30 years old, he has a long journey in that.
Yeah.
So I think looking at wealth in a broad perspective, broad way, is what they should do at an early age.
Thank you very much, ladies and gentlemen. And Deena, thank you, Hamad and Ahmed. It was a pleasure having you also with us here.